How we doing, everybody? How we doing? Today is February 15th, 2024. It's Thursday. Just coming to you live on Tuesdays and Thursdays. We go live at about this time, 8:15 p.m., where we talk about real estate notes and note investing, creating notes, helping people understand how to buy and sell notes. Each time we break down, what a note is, why we like notes, how you can buy them, the process of buying them. So we just take little by little, piece by piece, to talk about real estate notes. We just think that right now, where the market is and what's going on right now, we just feel like this is something that people should make a part, of their strategy, of their overall investment strategy, especially their real estate strategy. No matter where you are in real estate, if somebody that's experienced, done fix and flipping and owns rentals, could be very experienced but never looked at or looked into real estate notes. This is a time to do that, to kind of maybe diversify your portfolio, look at another strategy to add to your portfolio to possibly increase cash flow, reduce expenses. And then if you're somebody that's new, just getting into real estate, um, I think it's a good time to look down or look at this particular path of real estate investing and being in real estate by creating notes, learning how to buy and sell notes. So, it's for the beginner and it's for the experienced as well. Also, for people who have retirement accounts, people who have investment capital. Maybe you do, a lot of business, fixing and flipping, or some of those other things, and you've acquired some money. Maybe you want to take that money and put it into an investment that can get you some passive income without the hassle of being a landlord or and things that come along with that. So, that's what we do. We also look at deals. Still trying to figure out this Facebook thing on how to um, share the screen on it. But we look at deals as well. We'll get to that probably the next time. Hopefully, I can kind of figure out how to, share the screen to do that. But we want to show, deals that are out there. Somebody that has, maybe $5,000 or $10,000 may be able to get themselves into a note, and collect payments over a certain amount of time at a certain and make a certain return on that. And then again, for somebody that may have more money, you can buy notes for yourself in a higher price range. But there are things in a lot of different price ranges when it comes to notes, and there's inventory, coming to the market. And again, with what's going on with banks, what's going on currently, there's a lot of homeowners that are in some form of default right now, and banks are not going to necessarily foreclose on all of these people. What they're going to do is pull together their notes, and they're going to sell them into the secondary market. So we'll kind of break that down a little bit more, but the the gist of it is that inventory is here and there's more coming throughout this year, going into 2025 and beyond. So this industry is growing. It's about a $22 billion industry right now. It'll probably be somewhere north of 25 billion going into next year and in the future. So it's growing for a lot of different reasons, and we just want to tell people why, give them certain reasons and practical reasons too, because of what's going on right now. If you're not, say you're not in tune with everything, but banks are really pulling back on the availability of credit. Um, it's getting tougher for people to get qualified for a mortgage for whatever reason. There's a number of reasons depending on how the person makes the money, something on their credit, something that happened in their past, the type of job that they have, and banks are just a little weary about potential layoffs and things that may be happening. So people are getting denied, of when they are trying to get approved for a loan. And as a note creator or note investor, what you can do is that could be to your benefit, because there are a lot of people out there who have made money over, the last 3, 4, 5 years, and stock market going up and real estate going up and things of that nature. They have money, and for whatever reason, they can't get qualified at a banking or lending institution. So this gives us opportunity to create a note for these individuals who have, a good amount of money to put down, have good income. Again, may have had something on their credit, but we're not immune to the issues that are on the credit, but we don't take that into as big of a concern that a bank would. So, somebody could have a bruise on their credit, and, we could still approve them and get them into a property, because they have a good down payment and things of that nature. So, and they have the income. So, and we do this by sending them to a registered mortgage loan officer who will get them qualified like a bank would. Look at their debt to income ratio, see how much money they're making, can they really afford this? And then if they can, we have the opportunity to create home ownership. So one of the reasons is just the lack of credit that's happening in the market now. Another reason is that we, from a social aspect, we don't want to continue just to make everybody a renter. We want to help the process of making people homeowners, as opposed to renters. Renters feel differently about a rental house or apartment than they do if they are an owner, if they know that their dollars that they're paying are going to building themselves and their family equity on the property. So a lot of times they treat the property different. They approach the situation a lot different than a renter would. So that's another reason why, in this current climate that we're in, we want to, try to get more and more people over into this side of the business so we can create these notes. And we create them because there's people out there that can fund certain amount of deals, and we create a note against the property, a lien against the property, and we repay that person back at a certain interest. A lot of times we do that at a higher rate of interest than where that money is sitting currently. If you have money sitting in an account getting 2, 3, 4%, 5%, a lot of times we can get you above that, possibly double what you have currently. And it is secured by the real estate. So, trying to, get past this, or be someone that creates homeowners as opposed to renters is the reason why we want to do this as well. So, another reason, you have low risk with a high yield. We can lower our risk with notes. How do we do that? Well, when we buy them, we always buy them at a discount. So just for simple terms, let's just say somebody's offering a note. The property is worth 25,000, and I'm just using lower numbers just to make the point. The property value could be $25,000. Maybe this note has about $22,000 left on it. And what we try to do is make sure that we buy at a certain percentage of that $25,000 of value. So I don't have my calculator here. So 25,000, and we try to be somewhere around 70 to 72% of the value of the property. So that would be, let's see, 17,500. So that's probably the maximum that we want to be in terms of paying for this. So now, if there is any downturn in the market, if there is something that goes on, something that happens, values start to come down, we've given ourselves about a 30% cushion right there. So hopefully, they don't drop further than that, but that is a possibility. And if it does, there's other things that we can do at that particular time. But just for today, we'll just focus on, if we'll get it at the 17.5, and this could be paying 7, 8, 9% or more interest annually. Person, you would buy this for 17.5. Now you would start to collect whatever the monthly payment is on this until that remaining balance of the 22,000 is paid off. And so over the life of this loan, however many months is left on it, you would have taken 17,500, and if it paid off, let's just say in a month that you from 1 month from when you bought it, you would still be owed 22,000. So you've made about almost $5,000 on a $17,000 investment. So if you take that, let's just say it's 4,500. If you have some closing costs and stuff like that, that's a 25% return. I mean, people, that's a great return, especially if it only happens in the first 6 months, the first year. If you could get 25% return on an investment annually, I mean, I think you would want to do that investment each and every year, at least once, if not more than once. So, um, we always buy at a discount so we can lower our risk and increase our yield. So that's another reason why we want to do this in the business and in this arena. People know that 9.5 times out of 10, someone is not going to pay. And that's the example that I gave you, the whole 22,000 for the unpaid balance for that. Even though technically they could do that, because again, you're going to be collecting payments over time, and if you were to collect payments over the next 10 years or something like that, you would definitely make more, make money on top of the $22,000 that you bought it at. But you know sometimes people either sell a property or they refinance, and then you can only get paid off what's left on it. So worst case scenario in that, you would break even, um, because you would have paid face value, or what they call par, for that particular note, and then it paid off, let's say 30 days later. So you'd have made gotten one payment, and then it would have paid off. I mean, technically you wouldn't lose, but because all of your money would come back to you plus the 1 month that someone paid. But it is, um, how should I say it? It is like a rule of the industry is that you sell notes at somewhat of a discount. So that's why it's another reason why we like it, is because of the low risk and the high yield. Um, just checking out some notes here on stuff that I wrote. Why else do we want to do that? We have security. Another reason is that we do have security. The property secures our investment. So in that example, if something went wrong on that $25,000 property that had an unpaid balance of 22,000 and we paid 17.5, the person who was paying us every month, let's say in 2 years from now or 18 months from now, they have an issue. Life happens, a divorce, they have to move, they lost a job, whatever the case may be, and they got behind. We can always get the property back as collateral. So for our $17,500, we have this $25,000 asset. And it all depends on how all this stuff is written up in terms of documentation. And if you do it the right way, you may not necessarily have to go through a whole foreclosure process, which costs money, but you can get this property back from the owner. And could you not sell it for 17.5? Would somebody not buy it for that, for what you at least paid for it, be getting a property at about 70 cents on the dollar. I'm, usually you can find somebody to do that. Maybe they want to turn it into a rental or do something else with it because they're getting it at somewhat of a discount. Or there's, other things that you can do, but you have the thing about this is that you have this tangible asset. A lot of investments, they don't give you a tangible asset that if something goes wrong, you can get it back and then go sell it. Stocks, you just have to kind of wait, sell a stock. You might have to sell it for a loss and then put that money into, another stock that may be going up or something like that. But if something goes wrong, you don't have that, physical, tangible asset like you do with notes. So, just another reason, why you want to do it because of that security. And how I kind of touched on, you have multiple exit strategies. That's another reason. I'll just go into that right now. You have multiple exit strategies when you are the bank, when you are receiving the payments, and run into an issue. The owner of the property runs into an issue. You have multiple exit strategies. You could, if you wanted to, if worst came to worst, and you didn't want to be the bank on the property, could you not rent that property? How much would that $25,000 property rent for? Let's just say it rents for $500 a month. You could do that. Take a deposit, use it as a rental. I wouldn't necessarily suggest that you do that, but that is a possibility. Could you, like we said, we could sell the property once we got it back. Um, maybe somebody will give us $20,000 for it because they want to live in it. Maybe that'll happen. But you have a lot of different exit strategies once you have that property back. That again gives you that security um, for your investment. So, um, lastly, I'll say because we're buying these payments, you can use this to grow a retirement account. Just depend, whatever type of account that you have, and you're not going to retire, let's say for another 10, 15 years, whatever the case may be, you can buy one of these things in a retirement account and just let it sit. And then now you know that your retirement account is getting 8, 9, 10, 11% interest annually. And it's just passively. It's just going to happen year after year. Again, if something happens, the worst thing that they could do is continue to pay you. Because if you got the property back and you had to sell it, or let's say you created another note on the property, took another down payment, now your returns go up. If they were 8, 9% before, and you have to take the property back and do some other things with it, you can see that your return on your money will actually go up in a lot of instances, because you're going to get, everything that you put into the property plus, some profit if you have to sell it. If you have to rent it, you get another deposit. You get that monthly cash flow. If you do another note, you get more of a lump sum down payment from a buyer, and then you're probably getting a higher monthly payment. Um, so, if they pay you, great. If they don't, great as well, because we can figure out what we can do with this, and we all map this out prior to purchasing a note for any type of person that we help get into a note or sell a note to. We kind of map these exit strategies out and say, hey, this is what you're looking at, and if this happens, if A happens, if B happens, if C happens, if D happens. So when it does happen, you don't have to panic. You can say, okay, now we'll go to B. Maybe I don't want to do B, maybe I want to do C, because of things going on in the market and stuff like that. So, you can create that passive income for a long period of time with notes, especially like I said, in a retirement account. And then also you can pass these on to your children, your grandchildren. You can be part of your estate, that if something were to happen to you, at least it stays in the family and is providing cash flow for other people. So, these are just, a few reasons why we like notes, and we try to, put it in context of what's going on right now, with inflation, um, People thinking about retirement accounts. There's a lot of retirement accounts out there and pension funds that are tied up in this commercial world right now. And we don't know how all this stuff is going to play out, but it doesn't look good for commercial. And, a lot of money, a lot of our money is tied up in a lot of these big buildings across the country. So, some people's pensions, some people's retirement accounts, and things like that could be taking a hit. So, again, if we can kind of shift you over into a note, and there's ways to do that if you do have a retirement account and you're, you know, a little nervous about having to pay, um, any type of fees or, your taxes, stuff like that. There's accounts that this money can be moved to that will, kind of protect you, from, depending on the account that you use, can protect you from, any tax liabilities and stuff like that. So now is just the time to look into this. Again, today was a focus on why notes and what they can do for you. Um, and that's what we want to talk about today. And the next time that we get on here, we'll kind of go into the types of notes. They usually fall in about three different categories, and we'll kind of go over those and talk about those a little bit further. And then hopefully I can be able to share my screen um, the next time that we're on, so I can, show you what is out there, some of the deals that are out there. I saw things $10,000. There are notes for sale on properties. Property was worth, I think it was worth about 55,000. You could buy the note for 10,000, and somebody was actually living there. So, different parts of the country, we have different values in the South, the Midwest. You get a lot of different price ranges, and you can get those lower price ranges in those areas if you don't have lots of, quote unquote, lots of money to invest if you have a smaller amount. And so that's what we want to focus on. We want to help people build wealth. We want to help people become the bank, get into the mindset of thinking like a bank, on helping people create notes, just to build passive income and to hopefully just help them live the lives that they want to live. And that's what our goal is, to help primarily some of these people that are not making the six figures a year, and having some trouble with the monthly expenses and things like that because of inflation, costs of stuff going up. If we can get you to use your retirement account, if you're with a company or something like that, even though it goes, the money goes into your retirement account, and it's not gonna, obviously it can't help you with your monthly expenses, but at least you can, try to, help your retirement, right now for the future. And then if it's not something that's tied up in in a IRA account or something like that, then we can take that money and try to invest it, help you invest it, and help you on a monthly basis, with passive income, with your expenses and things of that nature. So, we'll be back on Tuesday, again, 8:15 p.m. We may push it to like 7:30. I'm still debating, but between that time, around 7:30, 8:15, somewhere in there, we'll go live again. Hopefully, if you see the replay, if you have any questions, please post your questions, and we'll get them answered for you. But we want to try and get this out there. We think it's going to be a big year this year for real estate notes going into next year. And we have the opportunity, similar to what happened back in 2007, 2008. A lot of people made a lot of money during that time because real estate went on sale. And this is a way you can get some of those sale type of properties, sale type of assets with real estate notes. So look into it. Go to my YouTube channel, Abundant Capital Group, on YouTube. There's videos there. They're open to the public, and it'll take you through the whole process. We did presentations on it. We have breaking it down piece, part by part, all the way to the end when you buy the note and everything like that. So all that stuff is on there if you want to check that out. All right. We'll see everybody back Tuesday. Okay. Have a good night.